Hello, the Stockhead faithful. Good to be with you. This week I'll be talking about an Eastern States tin developer with some pretty high-grade prospects emerging. First on markets, there's been plenty going on. Obviously, ongoing tariff talks, likelihood of US backing down from its fairly aggressive stance. Interestingly, economic activity in China is picking up. Steel production starting to recover. A bit of trouble in West Africa. I did talk about Burkina Faso, Niger and Mali being the hot spots, but recently Guinea has cancelled 51 licenses, or mining licenses, including a number of bauxite operators, so that's going to put pressure on around about 40 million tonnes of seaborne ore. Other news, the Canadian Securities Exchange recently announced a proposal to acquire the NSX for about 3.5 cents a share. Represents about a 60% premium to the last traded price. I think it's a pretty significant move. The Canadian Securities Exchange, which made their name with cannabis companies about 6 or 7 years ago, had a big impact in junior resources as well as something that looks like the old Vancouver Stock Exchange, a secondary market. That's certainly going to shake up the ASX when the Canadian Securities Exchange get moving down here. On to our stock of the week, Caspin Resources. The ticker is CPN. Has a market cap around 10 million, recently raised about 2 million, so sitting on about 3 million in cash with an enterprise value of about 7 million. Chairman is Justin Tremaine. Many of you know him from Tariffs Resources, which has had a pretty good run in Cote d'Ivoire, gold developer. The managing director is Greg Miles. He's a geologist with around about 25 years experience. Project is in the Ardelethan area in the Riverina region in New South Wales. It's a historic producer, produced about 48,000 tonnes of tin over the last sort of 40-50 years. Tin prices have remained pretty strong, averaging around 32,000 US a tonne this calendar year. I have seen some projections up around 45,000 a tonne, and obviously the key driver there is electric vehicles and the use of tin in renewable energy infrastructure. The company acquired the project in the third quarter of last year, covers about 1,200 square kilometres over about 3 leases. The reason I like this project, it's getting some very high-grade intersections at Bygoo North, about 35 metres at 2.1% tin from 43 metres down hole. There's multiple prospects along this 500-metre strike. There's numerous old workings that haven't been followed up. There really hasn't been a lot of systematic exploration, even when Aberfoyle was operating in the 1980s and had to close it down because of declining tin prices. Very large database. I think a target of around 5 million tonnes or better would be enough for a standalone operation if these grades hold up. So the prospect of a high-grade open pittable resource is pretty good. Mineralisation on a lot of these prospects remains open. Next phase of work is going to be some cytometallurgical test work. I don't anticipate any problems given the historical production and pretty good recoveries they had previously. Drilling's going to continue on some of these regional targets. So I think this is definitely one to watch. My main concern was landholder access, but I believe they've got 5 or 6 agreements and have very good relationships with the locals, so that's a real tick. And obviously a risk in New South Wales, as we've seen some with some previous approvals. That's all for this week. Look forward to seeing you again next week.